Hey, this is Mike Diercksen with Proactive, and you're listening to the Building Byte podcast. Tune in as we spotlight a collection of guests from Lockton Companies. We have Executive Vice President Paul Primavera, Senior Vice President and Strategic Lead Matt Goss, and Senior Vice President Tom Hester of Lockton London. Today's topic is a construction outlook of 2022 with a deeper dive into builders' risk. For more information on this episode and others, please check out the Building Byte at www.buildproactive.com.
Welcome to the Building Byte podcast, a podcast for construction contractors, owners, and insurance professionals where you can hear from the experts about key and relevant topics to help keep you successful. I'm Chris Epps, a Senior Director with Proactive, and I'm joined here with my co-host Mike Diercksen, our Senior Consultant of Innovation and Content Solutions. Our guests today, a collection of thought leaders within the construction insurance space, are Paul Primavera, Executive Vice President, Matt Goss, Senior Vice President and Strategic Lead, and Tom Hester, Senior Vice President out of London with Lockton Companies. Our topic today is a construction outlook in 2022 with a deeper dive into builders' risk. And leading off the first portion of our discussion today is Paul Primavera, where we'll focus on Lockton's recently released 2022 Construction Design and Outlook Report. Paul, how are you this afternoon?
I'm doing excellent. Chris, how are you?
Wonderful, and happy to have you guys on today, generating some good discussion. Mike, how about yourself? How are you this afternoon?
Doing great, Chris. Really excited to have the Lockton guys on here. Been a process to get everyone scheduled with having our friend Tom over in London, but we're really excited for the conversation and for what the audience is going to get out of it.
Fantastic. And Paul, before we dive into our main topic, maybe you could tell us a little bit about yourself, your background, and the team you lead over at Lockton.
Yeah, absolutely. So Paul Primavera, it's interesting. I've been in the insurance industry for 30 plus years, both on the carrier side as well as on the broker side. And obviously during that time frame have served on a variety of different positions. But I've always been drawn into and back into the construction and design segment and industry with any of my jobs. So it's always been enjoyable to me. I've always enjoyed the individuals, both that I've worked with in the different organizations, as well as the contractors and designers and carrier partners in that space. I've been here at Lockton for a little over 14 years. In my current role now, I'm the Executive Vice President and one of the practice leaders within our risk practices group. And one of my responsibilities, the pleasure of working with our 300 plus associates and producers within the construction and design practice, leading that group and working with our individual clients as well. Lockton's is potentially unusual from a standpoint of, as our organization had started back in the 1960s, it grew out of the construction and design and surety space. Jack Lockton was associated with a bond surety underwriter position, and that naturally flowed into the business when the organization was first started as to how we built that up. And certainly years later, that continues to be the case of where we are today. If you look at a small makeup of our clientele, for example, in the construction segment, specifically general contractors, we have as our clients 25 of the top 100 general contractors, and then 15 of the top 50 design firms in the organization. So we look forward to growing that business every day.
Yeah, no, Paul, we're really excited to have you on. And for any of our audience that hasn't seen the report yet, we'll have a copy. You can find it at www.thebuildingbyte.com, as well as on Lockton's website, which is global.lockton.com. Paul, the report shares a lot of great insights, and I wonder if you could share with our audience some of the highlights of the projections that you're seeing and what you think will be impacting our industry in the near future.
Yeah, absolutely. So when we typically put out that report twice per year, once in the beginning as the year is starting, and then typically later on during the year. It's around the fall typically. So when we go back and look at the current report, you're never really sure as we're putting that together how those projections, as we collect them from a variety of sources, are going to look. But as we check them on a monthly basis, they are fairly relevant to what we're seeing in the industry. And what that is that we had projected, and most entities had projected, continued growth in the industry, especially on the commercial space, right? The non-residential aspect of that. So we continue to see that growth. I think we were thinking that the Infrastructure and Jobs Act, we would see even greater growth from that. That has been slow in regards to coming on, although we are seeing projects coming on through our clientele and within the larger industry groups from that, as well as some other factors. Certainly the concern for contractors and designers in this field as we go through 2022 continues to be aspects such as the ability to retain and attract workers being probably number one. And that's followed pretty closely by material costs and availability. And in that regards, we are certainly seeing, even today, a different way in which project delivery, at least from a material standpoint, are being done. You're seeing materials being ordered much more in advance than we would have in the past. And actually where it really shows up is when there's an unfortunate loss on a project where rebuilding is needed. You will see that delay in regards to material costs simply because it's you have to get that at a time where it's unplanned. So that's a lot of what you'll see from an availability and time frame standpoint. And then the last point being the profit margin at a project level. And what we mean by that is certainly the cost of doing business. Certainly we see inflation rise. Even before that, the profitability and the ability to manage a project by project level was already difficult, and it's only gotten worse.
I would jump in there and say, Paul, too, I think that ties very closely with what we see with the AGC economic outlook, too, where they're seeing inputs to bid pricing rising faster, especially with gasoline now and diesel fuel, much higher than actual margin on those bid prices. And that seems pretty consistent with your reporting as well.
Correct.
Yeah. And with that, there's a lot of challenges and opportunities within the current environment. And we've talked to several people this season, and there's no right or wrong way. Well, maybe there's a wrong way, but there's no one right way to manage this. But, it is a unique thing for the industry, and everyone's approaching it a little bit differently. So with that in mind, keeping in mind that the majority of our listeners here, Paul, are going to be in the construction and insurance professionals, can you walk us through some of the areas you think our listeners need to be best prepared for? As Chris mentioned, gasoline prices, but what are some of the things that they need to be on the lookout for?
So there's a variety of different areas. The one I'll concentrate on that I think continues to be watched, surprisingly, is workers' compensation. And in the workers' compensation segment for insurance, it continues to experience growth, particularly from payroll increases. We're seeing on average somewhere around 6% increase. The markets, and if you ever and continue to monitor the earnings calls from carriers, the one consistent theme that you'll hear is either concern around, is typically the way it will be described, COVID-related losses. That continues to be a concern for the market. I would say, and this is a positive end of that certainly the frequency and the severity of what was potentially being planned has not materialized. So from a standpoint of impacting insurance markets' bottom lines, COVID-related workers' compensation claims has not had that negative effect, which is positive in that end. There's still a variety of other factors, though, that do. Certainly, and this is not a new concept, but the rising medical costs is always a challenge. And then we also have the shifting of workforce from a particularly older workforce to newer ones. And so training and development and the safety related to that is certainly something that has to be continuously monitored and handled. And with the COVID-related aspects of mandatory shutdowns, certainly in some situations, not for the entire workforce, but for segmentation of the workforce, the challenges of where workers are actually performing their roles, right, is much different than it was pre-COVID. So certainly that remote aspect of it, the management of that remote aspect of it from a standpoint of safety continues to be there. All of this certainly points to, we believe, a continued evaluation by insurance markets on their rate adequacy. So we predict that will continue to be examined, and it's not surprising that we will see some rate increases and filings related to that as we move on. One thing that we work within our clients here is the use of data analytics to proactively identify root causes related to their prior and, more importantly, future workers' compensation losses. So the ability to be able to look at data, get into that data, and figure out what are the 2 or 3 aspects that's driving losses, both from frequency and severity. How does that look from a standpoint of benchmarking? And what are some strategies that can be implemented and measured on a continuous basis, right? So it's not a one-time fix that can drive down an organization's total cost of risk.
Yeah, Paul, I would imagine, given the some of the drivers there you pointed to, payroll increases driving workers' comp rates and rising medical costs and the effects of COVID coming into this rising inflationary period, the data analytics behind that even still have to be just, that's got to be an incredible undertaking, trying to predict where we're going to land in 6 months, 12 months, 24 months. And it's not necessarily a topic we hear a lot about, but certainly connects to many of our industries' more relevant and more pressing needs at the moment. Are there any other segments you guys are keeping an eye on at the moment in terms of those analytics?
Yeah, certainly analytics in regards to auto is one that we look at as well. Certainly when you think of data analytics when it comes to automobile, the first thought that a lot of individuals think of is, okay, yep, transportation, fleet, things of that nature. But certainly the ability to be able to, and I think on the auto side, it's a little bit different because you can marry the situation of driver training, telematics, as well as loss data analytics to drive through some changes that are occurring. No matter what industry that you're on, and certainly construction and design is no different, there are vehicles on the road every day with those exposures. And what makes that segment line even greater of a standpoint of impact is that rate continues to drive upward from a standpoint of premium. So the ability to be able to look at all of those and apply what we would consider to be targeted strategies unique to that organization are vitally important.
Fascinating points, Paul. Are there any other segments in addition to those you mentioned that you guys are keeping an eye on currently?
Yeah, absolutely. I think the availability of certain exposures for organizations within this industry is key. And when I say availability of certain coverages, right, it's the marrying of the exposures that continue to be out there for the construction and design industry. And what are the solutions that can be applied, at least from an insurance market standpoint? We continue to sort of have conversations within the industry on that, because at the end of the day, as we talked about in the beginning of this, the industry is growing from a standpoint of work, right, pending backlogs, as well as projects. And arguably, those projects that are going on today are applying greater exposures to that construction and design segment class more than we've ever seen before. And right. the ability to manage that risk as we move forward is vital. So a good example of that is builder's risk, right? There's a situation in which certainly projects related with builder's risk that are wood frame related, right? There was a limited experience or availability in the insurance marketplace to be able to apply that solution to those projects. And certainly we would say that having adequate coverage, right? And I'll add in that affordable coverage from a standpoint of, right, it goes back to my sort of question or comment around profitability, right? So even in a situation where we may have some solutions, builder's risk side, the pricing of that from a standpoint of market was something that particularly here at Lockton we looked at. And I'm going to let Matt Goss and Tom Hester talk about this further, but certainly it's a good example of one where we did want to partner with the marketplace in regards to what solutions were out there and provide that solution to our clients on it.
Yeah, you raise a good point. It's great to have solutions, but they also have to be commercially viable, right? You got to be able to put those into practice. And I guess from that perspective, Paul, this has been very insightful. Certainly appreciate you leaning in here. And if you were to leave our audience with one action item or something they could look to today to start to prepare for the future, what would that be?
Yeah, I think, listen, I believe all organizations within the last couple of years have gone through some unusual times, is what I'll say, in regards to the environments that we're working within and the challenges that we see as we move forward. There's a large amount of talk about that, and where that ultimately ends up for any industry, and particularly the construction and design industry, is a guess at this point in time. I would leave everybody with the whole aspect of the most helpful aspect of that is certainly always looking ahead in regards to where we believe things will proceed, but applying that to your own organizations from a standpoint of uniqueness, right? How do those different factors, 2 or 3 factors, come into play in regards to what your particular organization is set up to do, the project risks that you're comfortable with, as well as the segmentation that you're within.
Paul, thanks so much for coming on today. It's been a blast connecting with you, and we're going to welcome now our guests here. So we have Matt Goss, Senior Vice President, recently promoted Senior Vice President and Strategic Lead at Lockton. Matt is leading a project risk group at Lockton Denver and working both nationally and globally in those unique project risk solutions. And our other guest, our first international guest, Tom Hester. Tom is also a Senior Vice President, partner with Lockton Companies, and leads the global construction practice out of the London office, providing construction-related solutions to clients and territories, both within and outside of the United States. Thank you both for coming on and connecting with us today. If I may ask Matt, if you could give us a brief introduction of yourself and tell us how you got to the position you're in today.
Sure. So thank you for having me on. Super excited. Never been on a podcast before. This is exciting, different for me. Like many of us, I fell into insurance, quote, quote. I've been in insurance for about 20 years. I started with Marsh in Southern California, doing a lot of risk management accounts, and eventually gravitated to Lockton. I've been here for 16 years, and I lead our project risk group, where we focus mainly with owner clients, doing project dedicated policies such as OSIPs or owner controlled insurance programs, builder's risk, project dedicated pollution, design, etc. We have roughly 180 active projects throughout the country right now. A good chunk of those are residential. It aligns with the construction kind of marketplace right now. The other kind of 30% or so of that is a good melting pot. Lots of sports arenas, hotels, hospitals, Department of Transportation contracts. So we're seeing a lot.
Excellent. I got to imagine you must be a big skier leaving Southern California for Denver. There's got to be an attraction to the mountains there, right?
For sure. Snowboarder. Let's get it straight.
Snowboarding. Okay. I understand. It's pizza, French fries, and snowboarders is just don't fall down, right?
No, it's a lot of fun here in Denver. I love it.
Excellent. Well, thank you for coming on. And Tom, if I could ask you to do the same, a brief introduction of yourself.
Sure. Again, thanks for having me on. Looking forward to our discussion, and yeah, absolutely honoured to be the first international guest. I hope I don't disappoint or let you down, and you'll have more back in the future. So I began my career back in 2004, just on the graduate scheme at Jardine Lloyd Thompson, after receiving a BA Honours in Business Studies at university. Fortunately for me, whilst being put on the graduate scheme, I was placed into the construction practice and quickly began learning from the vast array of experience and professionals around me. I had 10 great years at JLT before moving to Arthur J. Gallagher, to be part of a brand new international construction team that we were tasked with establishing and building out. My main role and function there was heading up the North American wholesale team and providing builders risk solutions for our colleagues throughout the US. 4 years later, Lockton offered me the opportunity to lead their international construction practice, which I've hugely enjoyed doing over the last 4 years. And I'm now a partner within the Lockton family with huge opportunities ahead of us, and I'm really excited about the future.
It's great to have you both on the show today. As we mentioned at the top with Paul, we're taking a deeper dive into builders risk coverage and some of the challenges and opportunities we have in that arena. So Matt, maybe I'll start with you and have you kick it off. As a broker here in the U.S., what are some trends you're currently seeing in builders risk in that space that either pose a risk or an opportunity for people in that market?
Yeah, I think, tagging on a little bit of what Paul said from the economics of the construction industry right now, I mean, it's really hot, the largest construction ever in the United States, and that's really translating to what we're seeing our clients build. A lot of that is residential. And even though we place a lot of different lines of coverage for construction, we kind of took a step back and looked at really what are our clients seeing and what are they complaining about and what are those pain points, not only from our clients, but our carrier partners as well. And that's been a lot in the builder's risk arena. Actually, specifically, it's been wood frame builder's risk capacity from the marketplace. Builder's risk, but other policy extensions on the back end of construction is really tough. And builder's risk delay claims are very, very difficult. And in fact, probably the average time to complete a builder's risk delay claim can be over a year in some cases for a big apartment project. And really, I think that got us to a point of diving deeper and looking around to seeing what our competitors are doing and what they're not doing and what our carriers are able to do, and maybe how do we get them to stretch a little bit further but align to that risk and bring some other unique solutions to that, not only to our clients but to the industry.
And I guess, what about opportunities in that space? Is there anything you guys have found as kind of unique opportunities there?
Yeah, I think probably the biggest thing in partnering with Tom and Lockton London there was really looking at how to think, what is the market offering now and why are they offering those certain builders risk policies, but also with Tom and his team's expertise is, what could we build to something that aligns more to the actual risks that we're seeing today? Insurance can be a little slow to evolve, and sometimes we got to kick it into gear a little bit and help,
slower than the construction industry. Come on.
Yeah, well, in some cases, and some of that is aligning that coverage and creating that coverage that fits. And I think that's really the biggest opportunity. The construction and what we're seeing and losses just move faster than really what the coverage forms and carriers can qualify. And I think one of the biggest opportunities is trying to stay at pace with that, with certain coverages or certain strategies.
Yeah, Matt, it's funny. I think one of the biggest faults that we have in this industry is the we've always done it this way mentality. And this is just, you kind of fall into that repetition. So it's encouraging to hear that, you're looking at the market, you're looking at your competition saying, hey, what can we do differently? How are we going to differentiate, solve these problems that we all seem to be having? And not only did you look around the room, but, you looked across the pond for some assistance within the Lockton family. So Tom, if you could take us through this program that you helped to create about 3 years ago, roughly, specifically designed to tackle some of these builders risk issues, I guess, specifically within the wood frame space.
Yeah, sure, Michael. I think the first point to make is that I was very fortunate that, my Lockton friends and colleagues gave me the time to really sort of sit down and look at the client landscape and realise what the pain points are and the elements of cover that maybe they're not getting that they needed. And, if that hadn't have been provided to me, which took a lot of time because we had to build a picture here in London with our markets who maybe weren't as familiar with some of the client base that Lockton had. then this really wouldn't have probably taken off. And then just to add a bit more to what Matt said in terms of the North American wood frame construction insurance sector is a real, markedly different landscape from a few years ago. And to that point, achieving equitable solutions for all parties can be a challenge. Having said that, wood frame construction continues to be perhaps the most common method of building domestic habitation structures in North America. And whilst construction using this material continues at huge growth and pace, as Matt alluded to, placing these risks both in London, Europe, and the domestic US markets has been increasingly challenging, even with specialist insurers who often either decline outright or they need to limit their capacity offerings. I mean, gone are the days, even outside of wood frame construction, where big, famous, well-known domestic carriers are providing 100% solutions to one project. That capacity has greatly restricted. Whilst wood frame construction presents elevated risk profile, which can attract large losses, I guess fire is the obvious one. When projects are unfortunate enough to experience an arson attack or something like that, the events and what we see on TV are hugely sort of damning and impactful. But let's not forget about the escape of water during construction. Some recent high-profile losses as well have seen a hardening of terms across the wider construction market, and that in turn, unfortunately, has led to difficulty in placing wood frame construction risks, as well as an increase in rates throughout the back end of last year and well into 2022. So that being said, we looked at that landscape, and I think Paul alluded to looking ahead and trying to figure out what's going to be challenging, in the future. So we managed to put together this program with all the data and information that my friends were able to provide me, and we put together, the Lockton US Builders Risk Facility. And very selfishly, from my point of view, I keep stressing to my colleagues, think builders risk, think London, right? So we want to see all types of builders risk construction, and we do get a huge amount of inquiries and volume in, which is fantastic. But just quickly touching on the program itself, Lockton operates an exclusive builders risk facility across the entire Lockton insurance construction portfolio, all across the country, with all the different offices there. This assures stability and program sustainability for the likes of Matt's clients and others, prospects, and we can represent owners, developers, and GCs. I suppose the key benefits of the program, we see it as a market-leading wood frame and non-wood frame capacity. We can provide sizable critical earthquake and flood limits within the program. We give you price certainty for all types of construction. We've put together matrices that fit within certain parameters of construction type, and that consistency of a policy form, which is it's a broker form and a client form rather than a carrier form. And whilst all carrier forms are absolutely fit for purpose, I think Matt mentioned some of the sort of struggles that have been had in recent times with regards to extension provisions on, inevitably overrunning construction projects. Having to adjust them towards the end of the project can be difficult. Within our program, we build in, again, certainty and comfort levels whereby we are able to provide absolute coverage throughout to the end of the project, with the ability of not really allowing our markets to walk away from any project. We are seeing that a lot at the moment. If I had a dollar for every inquiry I had for, Tom, we've got this project on the go through another program and they can't extend anymore, and we're going into another wind season and we've got 2 months left with all values at risk, can you help us? I'd be a pretty rich man. So we don't want to put both our Lockton colleagues and, most importantly, their clients in that position. And thankfully, up until now, in the 3 years this program's been running, that hasn't happened. So I think that's a nice addition to what we've been able to do. We give flexibility on defects cover as well, offering both leg 2 and leg 3 coverages, which in the construction space are really important. And I think that certainty in terms of the policy form and the pricing allows us to be pretty responsive when inquiries come in. I mean, construction is tough at the moment, but I've never seen so many construction opportunities, not just on my desk, but on my peers' desks as well. We talk about it socially and whatever else. And I think getting to the top of a carrier pile in terms of submissions is really important. And how do you do that? Well, you have a program that is respected, is understood. The audience is well known to the carriers as they become more familiar with the client base of Lockton. And I think we try and broke the right way. And with that, we're able to achieve fast response times and solutions that are absolutely fit for purpose for our clients. So they're just a couple of the summaries, if you like, of the program. It's proved hugely popular and a real differentiator, I think, to Lockton in their peer group.
Yeah, and Tom, you used the word responsive there in describing the program, and I think really sounds like that kind of speaks to the heart of where we're at as an industry and needing a dynamic product solution that I guess it factors in not only current changing economic conditions, but also bringing in the input of carriers, a wide range of insureds, and then the broker input on your end as well. If you could share with us the requirements for that program, hopefully that's not too much secret sauce there, but is there a certain threshold you're looking for when it comes to projects or volume of work that you could share with our listeners?
Yeah, sure, Chris. I've got to be careful what I give away here, as you say. No, I mean, to that extent, there's no secrets there at all. I think it's, from our point of view, it's familiarity. It's a panel of markets, okay, that have been on this journey with us for 3 years, and it's going to go beyond. They've stuck with the program. They respect the program, so they know, again, the types of projects that are coming in. We've strict parameters on four-wall construction, if you like. Now, our markets can entertain more complex projects, if to that degree, and that's actually allowed us through the program to look at other opportunities for Lockton. But just being respectful and understanding of minimum requirements from a carrier, and knowing that from the outset, and not just resting on your laurels thinking that they don't change, but move with the times. Understand that there's going to be different underwriting criteria as time goes on, and just keeping up to speed with that. In terms of size of projects, I try not to turn away any project size, but we've got to look at what drives premiums. So from an administrative point of view, for some of these larger carriers, there's minimum thresholds. But a rough, as a rough guide, a minimum of 15 million total insurable values would probably be the cutoff point, and we can go to a pretty sizable insurable value to what's needed depending on the construction type. And I think what's really important is that whilst wood frame is challenging, we have promised our markets, they've supported us on this journey, a balanced portfolio, and that's what they've got. They really have seen a real mix of the wood frame and let's call it preferred or other construction type is steel, concrete, glass into this program as well, and they're really happy with the balance. And I need to thank Lockton for making sure that happens as well.
Yeah, given the volatility of the market right now, I know we've alluded to that a little bit before, and material shortages, having concrete pricing, right? Having the ability to guarantee pricing, it's got to be a huge differentiator. And I wonder, is there a success story or something that you might be able to share with the audience, a scenario where one of your insureds really benefited from enrolling in the program?
I don't think there's one point in case, Michael. I would maybe give the example that as the GCs and developers have become more familiar with a consistent panel, they have benefited in their programs because they have been able to demonstrate through the provision of information, the way they talk about their projects, the way they allow our markets to come onto site and actually see these things being built, and the risk mitigation that goes in, that actually if projects from the outset might now have better terms and conditions 2 years later, even though we've got a hardening market, because that contractor or developer has demonstrated an ability to get the market comfortable and say, do you know what, I really, this cover extension, let's call it mold and fungus, is really important to me as a GC, and therefore I'd like my inner limit to be a bit higher. And rather than it just be dismissed, it's, well, I understand why you need it, and actually your risk mitigation allows us to consider it. And I think having that same panel has allowed us to, as I say, just increase that comfort level from the market to our audience. And I think that is it's an overarching success story, I would maybe say.
Yeah, I guess on the flip side, I know that there's got to be a lot of challenges with also starting a product like that, aside from just like the actuarial side. But Matt, maybe you could elaborate on that a little bit for us. What are the biggest challenges you guys see currently with bringing that product to market and continuing?
Oh man, I tie it back to like my challenges at home and like, man, how I work through solutions with my kids or my wife or whatever. And both sides have got to be considered. Right, there's got to be a balance, and that's the balance of the client, and that's the balance of the marketplace. And I think there's a lot of potentials and different interests that come in there that play into that balance equation. And I'll kind of explain it through a couple claim stories I have. We had a large claim in Southern California a few years ago where it was a 2-building wood frame project, 120 million in wood frame. And it was about 70 or 80% through construction. And it was end of Friday, beer o'clock kind of thing. And they were doing some grinding at the top of this roof. And their fire watch wasn't as long as it should have. And those sparked embers led to a fire from top down. And it was a total loss on one of the 2 buildings.
Oh,
and
wow.
It really led to, again, different interests. One of the interests of the owner saying, wait a minute, this delay coverage form does not make sense in how the carrier is going about this in the administration of this claim. And the carrier is saying, well, wait a minute, there wasn't good hot works programs in place, and there wasn't more of an immediate recognition of a loss that may occur, such as a fire by a security guard or a camera. One other one we had was an owner and a general contractor were in the middle of construction and got into a difference of opinion. And the general contractor told security to walk off the site because they weren't getting paid for this additional security that needed to be in place. And at that time, a guard was in place. And that guard walked off the site, and they had 5 different theft claims over the next 5 days. And clearly that security guard, told buddies, and it was an inside job. So the client's having a hard time because they need flexibility in determining what that appropriate safeguard should be. And the carrier saying, you know what, maybe a guard doesn't make sense. Maybe we start looking at some cameras that can be more impactful and can't walk off the job site. So, by taking all of that, what are our insured's interests and how can we really work with our carriers to get them comfortable that they're seeing preferred risks, that these are clients that are really focusing in on site security and immediate notification or recognition of fire or water damage after hours. But also, hey, our clients are looking for a better understanding and alignment of coverage to their risks, and delay coverages and locked in extension pricing and greater consistency in what they can be applying to their development was the ability to bring it all together.
And I think just to add to that, Matt, we've got a very strict gatekeeping process in Lockton, both in the US and London, with regards to the projects that can be placed into the program. They have to meet certain criteria, which is agreed with our carrier partners, is well understood by Lockton Associates in the US. And I'm going to touch wood here in the table that I'm sat on, but I don't think because of that, it's no coincidence that despite a lot of wood frame projects, a good number that have been finished now, because we're 3 years in, we've got an outstanding loss record. And that doesn't come without, I say, certain gatekeeping measures and criteria that we're very, very strict on, respecting our markets and the support they've given us.
Yeah, and Tom, to put a bow on both what you and Matt said, it sounds like you guys, there's a common element there that we actually hear in a lot of our podcasts, and it's communication, listening to the market and listening to all of your partners involved in terms of forming that product and looking for solutions for the market. In that regard, this has been a great conversation. Definitely appreciate you guys' time. And I think something a lot of our audience is probably going to learn a lot today. We typically like to leave them with 3 takeaways from our guests. And given our conversation today, what would be the top 3 things on your collective minds as maybe leave behinds for our audience? Matt, maybe I'll start with you there.
Yeah, sure. I'll start there. In the interest of really a lot of what we're seeing in the construction marketplace right now is relates to the real estate builds. And I think real estate developers are rarely just one project and goodbye, close up shop. They've got a good pipeline of opportunistic development. And each one of those is very different. We know that the cost of insurance, or the risks for that matter, may be very different for one project than the one directly across the street from another. But I think one of the takeaways there is getting ahead of what those risks are by being able to have the time to evaluate each one of those developments and qualify that with some of our markets to see where it fits best. So getting ahead is one of those big takeaways.
Tom, how about yourself? Is there another one perhaps you could add there?
Well, I've actually got the term getting ahead as well, slightly differently, but I think we talked a lot about inflation, or Paul did earlier. So I think as inflation continues to affect economies and industries, contractors and developers need to consider certain actions that can reduce the impact on their construction operations, right? So I would be looking at reviewing the project budgets against the current pricing, look at and consider supply chain challenges, reassess your material procurement procedure, and revisit your insurance policies. And just to back up that getting ahead, I think if inflation continues the way it is, and with the cost of lumber, timber and workforce going up, you're going to find yourself in a situation towards the end of a project where actually the insurable value far exceeds what you've declared. Okay, so looking ahead to that, what we're looking at doing from the outset is you put together a panel of carriers with their maximum capacity for a project, and maybe consider bringing their capacity back, adding a few new carriers so not everyone is maxed out, so that when you do inevitably have that situation later in the project, you can go back to those carriers and say, look, you were prepared to offer that amount at the start of the project, we now need that. You're not having to ask outside carriers who have no familiarity with the client, no familiarity with the project, to come in mid-term, and mid-term additions of new capacity is just not in appetite for a lot of carriers in the builder's risk space. So I think that would be a takeaway for me.
Now I'll add a third one there. Is I think we see, in at least on the client side, some developers running hot, and they're looking to get going and making sure things pencil and move on. And I think so important, at least from a broker perspective, to try and pump the brakes a little bit with your clients and set some good expectations purely around coverage. It's a real hard thing to bring forward and to kind of add a value to when you're trying to pencil a pro forma, but aligning that coverage to the risk and helping a client identify where that really is different in the different options that they can purchase from different carriers is vital. It can get real short-sighted of saying, great, this one's cheap, let's go. And then we talk in 12 months when there's a loss, and it's like, well, this is why, I believe you guys picked this option, but it didn't have 1, 2, 3, and 4. That's really hurting the balance sheet later.
Yeah, it's a common conversation we've had, Matt. Builders want to build, right? People want to move forward. Give me the next project. It's the next thing. And it's not necessarily saving time to skip that review process. It actually adds that same time on the back end, right? So taking that time to slow things down and make sure we have everything aligned so that we're in a better position is really important. With that being said, similar to the conversation we had with Paul earlier, we do like to add an action item along with the 3 takeaways. So if there's something that the audience is listening to today and they want to maybe pick something they can start today, tomorrow to move in that direction, what do you think that action item should be?
Because we have a bunch of audiences, I'll give 2. From a broker perspective, it's we overuse it, but it's so true. It's get ahead, really get ahead with your clients, look at their pipelines, start that strategy in advance. From a carrier perspective, and it's hard. I get it. It's a hard market. There's a lot of opportunity. There's a lot of cherry picking and ability to choose and move on, but be open to really aligning what your coverage forms are to that risk rather than that rubber stamp, this is how it is. And I think you'll earn a better partnership and probably see better business from brokers when you can do that.
Excellent. Well, we're going to start to wrap this up, but before we let you both go, we do have a couple rapid fire questions we want to ask you. So the first one's going to go to Tom, and I would like to ask Tom, what keeps you up at night professionally?
Well, other than 3 young children that keep me awake most nights, I would say there's a phrase that may be familiar, is war on talent. There's a changing landscape in construction, and we've seen in the talent pool. And I think finding, retaining, developing talent and creating a culture where everyone is contributing to the same goal is imperative, and it's a fundamental pillar of Lockton's philosophy. For me and Lockton, our people are our number one asset and therefore most significant risk. So for me personally, I want to ensure that every Lockton associate who we value so greatly are motivated, continue to love what they do every day, and in return they provide the highest levels of service, solutions and professionalism to our clients in ensuring the ultimate delivery of a robust insurance program and a successful project.
Pivoting off of that, I would maybe ask Matt, you guys have talked about dynamic solutions and the successes you guys have had there, but where do you guys see the market struggling the most with problem solving issues that exist with builders risk?
Tom fill in, but I kind of go back to what I was saying a little bit, because I'm seeing it on both sides, broker side, client, or all sides, broker side, client side, carrier side. It's just the ability to slow down and be more strategic. I think we're all trying to run and gun. I think, we're at a crossroads of a lot of real unique challenges we've never come across, COVID, inflation.
You hear unprecedented used a lot, right? Like that's where we are right now.
It's tough. And I think it's so much harder to slow down, but those that are slowing down and looking at unique strategies and how it can benefit the current time and the future time is the secret sauce. And it's really just being able to flex that muscle to do it and get ahead and be able to have the time to do it.
Like the old adage, measure twice and cut once, right? And you can better prepare, slow down, and then you're finding success within the projects that you're doing. So the last one goes to both of you, and it's something we like to do, but name something that our listeners may be surprised to hear about you. Matt, we already know you're a snowboarder, not a skier. That doesn't count. But we'll start with Matt. What might someone be surprised to hear about you?
Surprised? I don't know, but best movie ever, Top Gun, Maverick's the man. I was so excited for number 2 to come out. It was amazing. It's good times right now.
That was a great movie. I actually just took the kids to see that last weekend. I would give them a free plug here. That was an excellent movie.
Dude, I liked it.
Yeah. Nice. Tom, what about yourself?
It's definitely no surprise at home, but I've been fortunate enough to be involved in some extremely interesting and complex construction projects across the world. And whilst I try and assist in designing a robust insurance program, when it comes to minor practical construction related jobs around the house, I can't even hang a mirror straight. So in that regard, I've got a huge amount of respect for the ladies and gentlemen who are performing these activities every day in getting these projects prepared, vertical, and then functioning for the purpose they were designed. So it's incredible.
That is an excellent surprise quality there. So, gentlemen, as you may have noticed, it is the Building Bite podcast. That's BIM insurance technology with the experts. You are today's experts. We would ask, what are you taking a bite out of today? Tom, I know you've been thinking about this for a long time. What do you think what are you taking a bite out of tonight?
Well, given the time zones and being your first international guest, it's dinner time for me. So Wednesday is wood frame night, right? So I'll be tucking into a wood frame sandwich later tonight. There you go.
Excellent. Matt, what about yourself?
Damn, that's far more creative than what was in my head. I love anything wrapped in a tortilla. Burritos are like my favorite all-time food. So I'm probably crushing a burrito later.
I've heard good things about campfire burrito out in Denver. Is that one that you're familiar with?
Dude, no, that's new to me. I'm excited. I'm going to look it up when we're all done here.
Should give that a look. Give that a look.
All right.
Mike's knowledge of regional food offerings never disappoints. So yeah, take him up on that, Matt.
All right, deal.
Well, gentlemen, thank you again for chatting with us today. Really appreciate you guys taking the time. Appreciate Lockton devoting the time to have you come on. And if our listeners want to hook up with you guys, where can they find you social media wise? Matt, I'll start with you.
Yeah, LinkedIn, I think, is the best opportunity kind of on a broad basis, for sure. Okay.
And Tom, how about yourself?
Yeah, similar. I mean, we've got a really good website, Lockton Global Real Estate and Construction. We talk through all our activities, how we can provide solutions. We have brochures about the facility, etc. So that's a good place to start as well.
All right. And Paul, if we could bring Paul back, where can they find you, Paul?
Yeah, absolutely. Very, very similar through LinkedIn or our website. Honestly, get a lot of calls on my cell phone as well. So I'm going to be brave here and give out my cell phone, 410-336-4165, or hit me on my email at pprimavera@lockton.com.
Well, fantastic. Thank you all again for taking the time today. We really appreciate it. I know our listeners are going to love it. Thank you once more, and look forward to talking to you again maybe the next time your update for your construction outlook comes out.
Thank you.
Thank you all.
Thank you for listening to The Building Bite. This podcast has been brought to you by Proactive. Check us out on thebuildingbite.com, where you can subscribe to our newsletter and follow us on social media for all future The Building Bite news and updates. You can also find us on your favorite apps, including Apple and Google Podcasts, Spotify, Stitcher, TuneIn, and Amazon. If you have ideas for episode topics that we should cover on the show, or you know somebody who would be a perfect guest, let us know at connect@thebuildingbite.com.